Hello everyone. Last month I reviewed what sell in May and go away is, and how I don't believe it is time for investors to follow this old adage. Well, I was right. The S&P 500 has increased 4.5% and the TSX 2.5% approximately in just May alone. If you would have sold at the beginning of May and tried to time the market, you would have lost out on these gains. Speaking of gains this year, we have seen the S&P 500 experience 19 new highs in 2026. Can the markets keep going higher? Should I invest when the markets are at all-time highs? These are all questions I get on a daily basis. Here's a chart showing how 19 new highs for the S&P 500 in 2026 has compared to other years. This chart goes back to 1957 until today. You can see that 19 new highs really isn't a lot when comparing to previous years. The most new highs per year was 77 back in 1995. In fact, the S&P 500 averages approximately 20 to 22 new all-time closing highs per year when looking back in history. So, with the S&P 500 at all-time highs, I want to help answer the questions. Can the markets keep going higher? And should I be buying at all-time highs? You might be thinking to yourself, I shouldn't be buying when the markets are at an all-time high. Have you not heard of buy low, sell high? While this does apply in situations, I'm here to show you the numbers on what it looks like if you invest at new all-time highs in the S&P 500. Consider this: buy high and sell higher. Here's a chart from January 1st, 1988 to December 31st, 2025. It reviews your average return 3-month, 6-month, 1, 2, 3, and 5 years if you invest on any day versus investing at a new high in the S&P. You can see in 3 and 6 months that returns are quite similar. However, once you start looking 1, 2, 3, and 5 years, investing at new all-time highs actually performs better than investing on any day. One of the reasons for this is when the S&P 500 makes a new all-time high, there's strength behind the market. Bottom line, I mentioned this last month, that it seems like there are a lot of reasons to fear markets right now. But if you would have just stayed in the sidelines in cash, you would have missed out on some strong returns recently. I'm being cautious going into the summer, but I believe we can still see strong year-end returns for clients. As always, I'll stay in touch. Talk soon.